Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a whirlwind of price action movement, and that was after the US Federal Reserve Chairman ignited further risks of extending rate hikes, the market is now slightly settled down, with the dollar index, which measures the greenback strength against a basket of 6 major currencies, remains around 105.60 after surging on Tuesday from 104. In light of the pattern, the market appears a little bit hesitant in taking the challenge to 106 for the index, but breaking there would give further exposure for about a 300-point rally to 109. This, in terms, could put further stress on the markets. With that being said, though, I'm seeing a little bit of divergence coming back into the market in terms of bullish. When we look at the RSI, we've got a declining price, but also we've got rising RSI. Along with that, we also had from the overnight close an inverted hammer or an inverted doji, and therefore could see a slight recovery into today's session, and therefore looking towards 66.25 as minor, and the cap, which I feel may be a little bit to the tough side for the bulls to break initially on the first challenge, which is around 66.70-75. In light of the break of 66.60 previously, the market at this stage looks towards a potential target of 65 cents, so therefore the rise may only be temporarily. The euro was somewhat steadier when it comes to the market price action from Tuesday after Jerome Powell's testimony to the Senate Committee of Banking, Housing and Urban Affairs hearing from Capitol Hill. The latest economic data has come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated, Powell went on to say, and that there was more work to be done as inflation is running higher than the Fed's expected at its latest meeting. So with the actual price action, we can see there's divergence also for the euro. And with the Fed wrapping up its testimony, the markets were a little bit relieved in what was said on Tuesday was a little bit less hawkish on Wednesday. Still, I'm keeping a very close eye on this level of 105. A break there would give further scope towards the downside to 103. What would ignite this move? Because the euro is weighted to the dollar index at 57.6. A break above 106 would give further pressure on this level, 105, and beneath there, as I mentioned, exposes about a 200-point drop. Any advancement should find resistance around 105.65 as minor, but ahead of that, 106.2030 may contain any further run to the upside and eventually see another down test. A little bit of profit taking comes into play here, as we can see from this support line that now becomes resistance was challenged and a little bit hesitant in taking it further. Nevertheless, keep an eye on this pattern. There is a bit of divergence here as well. So it looks like from the overall reaction that we saw on Tuesday, a little bit of profit, or the market traders seem to be sort of shaving off some of their positions due to the closely watched non-farm payrolls report for February is expected to show 224,000 jobs created in last month. A slowdown in job growth from January unexpectedly was strong reading of 517,000. However, the unemployment rate is expected to remain steady at 3.4%, which is the lowest since 1969. Let's see how the market plays. I don't feel we will get much of a deep pullback and therefore could find support somewhere around 136.65 and likely to find further support, if I just lift this up, around 135.90-95. If so, then the rebound will be looking back towards that top side to 138 and with the eventual goal at 139 to 142. Keeping an eye on this pattern, we've got a very steep pole and a slight flag formation coming through. No divergence, and therefore could see the next test down, which is towards the support level of 118.10, and a break there exposes 117.50. If the market takes out that level, then I feel we are, from the measured pole, looks towards 116.75.85 as the preferred target. With any advancement, should struggle towards 118.60 to 119.25. Little direction was seen from gold overnight, as the market still appears to be somewhat nursing its wounds after dropping very heavily from 1,850 to 1,815, where we are now. I feel there is further downside pressure to come through, and looking towards 1,804 as the immediate target, we could actually see this extend to 1,786. Any advancement looks towards 1,818 to 26 as a short-term resistance. And following up with oil, we got further extension to the downside after collapsing from $81 a barrel to 77, and now posting fresh lows around 76.50. The call at the moment is to 75.55, and a break there. I see little support until $72.50. Any upside attempt should be limited around 78.20.25. Well, that's a wrap for the morning. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the day.